Buddy, what's going on? Hopefully everybody's having a great trading week and we are learning something and paying attention to details because details is key. So what is going to talk about today is basically what is the few things that I've been talking about previously on different social media platforms. You can go check them out. Link is in the below, and it's basically been pointing out a few things about gold, also about really I just talked a little bit about Bitcoin, and we'll get into the video just about now. So what it is, for example, let's see on gold, I've been looking for is a few things. First of all this push down, we're clearly bearish on gold. Clearly bearish. Nothing as of right now has been stopping this to go bullish. You can see a lot of pointers have been showing this. Every time we get a little small push up into what is it, this strong trend line right here, this pink one right here, we are getting a push down. So you can see it right here. It attempted, this right here is a rising wedge. You can call it whatever you want. It's a wedge. It's a wedge pattern that has potential to fail and have a nice sell-off. So you can see right here, you had a push up, push up, push up, and fail. Every single time it pushed up, high volume came in right here. If it fails to break above this, you get a bearish candle after. It's an indication that bears are starting to come in. And which they did right here, you can see they came in heavy. For example, you can see it right here. Look at this push up. Failed to close above, push back down on the next hourly chart, and we ranged from there. The thing is, why did it tank down? Is cycle happens, repetition happens consistently in trading. You can see attempt to push up, fail, attempt strong push up, knocking out bulls, whoever was in, fail. So if we come and look at the 5-minute, we can see a little bit more clearly. So let's look at it right here. That is this trade right about here. I know it looks a little bit choppy and messy and everything like that, but I can clear that up for you guys. There's nothing really too messy. It's just this is when price action happened. You can see strong push up with volume. Right here, this candle is not really a clear sign that bulls are in control because it didn't close above. The next candle, it did close above. Bulls are still in control. The problem is on the next candle, we had a bearish candle. And then after that, you can see bears are really starting to come in to push it down. You have no demands popping in everywhere over here. Failed attempts to close above the high candle. Push back down. Clear indication that bears are back in control. And as we start to rise down, we are getting little push-ups, nothing too crazy. We're getting little push-ups like this, up, back down, up, back down, up, back down. You can see it right there. So this is not bulls that are in control. This is more of bears are accumulating price to drop it as low as possible. You can see I called out this right here as a no demand because all of this right here, these are clear signs of indication that it is failing to close above to break structure. Because if we close above this, we are starting to break structure. That means bulls are already getting stronger, but they are failing to do it. So you can see you had an attempt to push up here, failed, push back down. Bulls came back in right here because of this trend line right here. Touch, attempt touch, attempt touch, attempt touch, attempt touch, and you can see, so it's kind of strong. So if it breaks it, it's gonna sell off. So you can see right here, push back up with heavy volume, and then what happens is, look at this, a no demand pops up right here. The no demand, remember, is the 2 volume bars previous are higher than the no demand bar, which is this right here. It's low than both of these, so it is considered a no demand bar at the top, of course. But the problem is you have to wait for confirmation. You didn't get it on this candle, you got it on this candle. This is a strong move to the downside as far as a short goes, because of the fact that you close below this. This engulfing candle right here is a clear engulfing candle. You had a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You had all of these, it closed below it. So there's clear signs that bears are in control, and big time they close below this, reattempt to test this trend line right here, rejection line, whatever you want to call it, and it had a push down and a clear push down. We came, and again, where did it come back to test? It came back to test all of this area right here to see, as we got a push up, it came to retest to see if we could break above this area and close above it. It could not at all. Every time it pushed up, you got to push back down. Push up, push down, push up, failed to break above, push down, push up, 3 candles down. That's it. Bears are in control and they know it. And you can see they clearly were in control. It pushed straight down. This happened also again right here. I'm not going to go into the exact details, but it happened very similar here. You had a trend line, a rejection line, whatever you want to call it, a rising wedge, a wedge pattern, whatever it is, happen again right here. You can see it right here, and this candle over here. Let me get a nice zoom in. You can see it right about here. This is a no demand. This is also a no demand. Clear indication that they are not able to close above to break structure. So it is time to enter for a short right here, and you can re-enter right here. Got a nice push down again. Now, what I've been talking about is this right here in my previous social media that I've been putting out. This right here zone was a clear push below. I'm keeping it on the charts just because of the fact that it did come back up to it and fail and push back down again. So it is telling me that this is something to look out if it becomes bullish. So this is why I'm looking at it. I'm going to put the 4-hour chart we can see what it is that I was looking at. You can see it right here. It's this area right here. There was a failed attempt before to break below this. Clearly 1, 2, 3, 4, 5, 6, 7, 8, 9, all of these right here was failed to break below until we had this bull run, which happened back in the beginning of the summer, and it kept on pushing up. So what it looks like is could be a key area. The second key area is this right here. It's a big area though. It's a big it's a 20 some dollar, so about 200 and some dollar zone. Just watching it, seeing what it happens as it touches, you can see this was the last run that we had after we had the bull run. Attempt to break below, push up, attempt to break below and continue down, but it could not happen. And so this is looking like a very strong area. You can see this is the low, this is the high, attempt, fail attempts. So I'm looking out in this area very closely to see how it reacts. As of right now, it is reacting to the upside. As price comes down, volume's kicking in a little bit with a bullish reaction. Again, volume kicked in a little bit, bullish reaction. This is the 4-hour chart. I don't trade the 4-hour chart, but it just gives you insight as to the overall picture as what's happening. On the 1-hour chart, you can see it more clear. You see a push down, bullish reaction, push down, bullish reaction, push down, bullish reaction. So I'm starting to get a little worried to short this position over here. So I'm just watching. I'm not calling out anything until I see clear signs of a bullish reaction to the upside. That is as far as gold goes. As far as I've been getting called out a lot on Bitcoin anytime I mention it. I don't have nothing against Bitcoin. Please, people understand this, that I don't care about Bitcoin, what it does, if it gets to $1 million, if it goes down to zero, whatever it is. I trade it based off of the charts. Nothing more, nothing less. I got called out a lot because of the fact that I made a little small video about this, why gold tanked right here, and what was the reason it did. Same concept as far as gold goes, why I draw the, why I choose what it is I choose. It has the same concept. You just have to adjust it a little bit for cryptos because it's such a media driven, hype based reaction more than anything out there right now. So still doesn't have clear structure of how you would trade it, but it's still, I would say, about 75% similar as far as Forex goes. So I drew this out and I called it out. You had a high reaction right here, you know, everything like that, and you had the push down. I just want to show, people were telling me that this was a bad reaction and what I called out, but look at this trend line right here. But look at this trend line. If you draw it out, okay, so let's say we had it to that first point, you had it to this second point right here, this point, this right here, which we had to push up, and then this point right here. So let's draw it out and let's just extend. Even if I didn't want to draw it like that, if I wanted to draw it out a little bit more, let's draw it out like this. It broke above, don't get me wrong, but still, it failed to close above it. Failed to close above. Failed to close above. However you draw it out, it failed to close above. This trend line is also still a clear indication that there is still something happening where it may fail again. Be wary. Don't trade blindly just because people are saying it's going to 500,000 or whatever the case is. Just watch charts. Charts don't lie. Simple as that. And peace out.